really don't know what I'm doing here. That's kind of the theme when I start the stream. It's all right. It takes people a moment to trickle in anyway. I'm going to go ahead and see if I can get my extensions opened up so I can, let's see here. Really? I have to like go into this and freaking go into the plugins. I don't know. I don't know how to do this. This is so dumb. You know what? We're just going to go. I think I already have it. So as long as I have it, it'll just be like, hey, I already have the stream dashboard. That's so weird. Okay, I'm going to do this using YouTube then, I guess. If I go to content, there should be something here. Still no viewers. Good. Takes people a couple minutes anyway. Generally, live. Okay, YouTube knows I'm live. That's cool. And let's see. I need to go to the link. Okay, nice. And then I just turn on the stream and then I should be able to see the chat as well. There it is. Okay. All right, everything's looking good, I think, right? Seems like it. Am I frozen? I think I have like this lag problem. I'm not really sure what's doing that. But hey, we're here. I'm watching the chat. If you want me to look at something, let me know. I'm going to type that too. If you want me to look at something, let me know. There. Yep, I'm giving myself a heart. Awesome. Okay, I think I'm going to start with BBIG. It's getting a lot of attention because of this big rally we've seen. You can see the volume spikes here. Maybe what I do is I start a new drawing set. I don't know. We'll just call it the drawing board, which I tend to do. And then I do a bunch of analysis on the drawing board. And then it's less of a drawing board, more of just like a full-blown analysis. And then I have to relabel it. But then I already have something else labeled blank. And it's not actually blank. So then I make a chart that's called actually blank. It's bad. Not super organized like that, I guess. But whatever. Okay, there was a reverse stock split here, and that's why you see the price just skyrocket. This was 20 for 1. If that was like directly translated from like 14, what's 14 by 20, right? I like to have a calculator up. I'm really bad at math, and I don't want to sound stupid, so I'm just gonna like put it in. What was the low here? The close at 0.14? 0.14. And then we're gonna multiply it by 20, which is gonna give me 2.8. Really? Wow. Whoa, let's see what happened here. 2. Oh, look at that. What's the high here? 2.86. Ha! That's funny. That was a little too easy. So if you looked at the closing price before the 20 for 1 split and then just multiplied, you would have gotten that peak right there within 6 cents, which is ridiculous. This isn't really a reversal to me. It's kind of weird to see all this super low volume and then another big spike through here. After the split, no one was really interested until we got a big boom in volume. I guess what we should really be saying is maybe this is crazy, but you know, if I do a measured move up here, 100's too tall, right? 371, we're looking for 280. Let's see if it's one of these levels though, just to kicks and giggles. There you go. 61.8%. Weird. That was weird. That was a weird thing. I don't think that this is a big deal. I really don't. The volume is pretty high. Honestly, on the daily chart, it looks pretty high, but it's already starting to dwindle. And your RSI is reaching overbought, and this is probably the top of a corrective wave to 280. So that's where I'm at with BBIG. Oh, no diarrhea today. Excellent. Yeah, congratulations. I'm glad that you dealt with that. It can be really unpleasant. I do know. I do know. Don't we all know? Oh my goodness. Let's move off of BBIG and let's go look at AMC or something like that. I think that's what people are generally most interested in. Looking at the daily chart through here, blowing this up. I thought we would be hanging out in this area between 427 and 450 for a while. I think in the last video I analyzed AMC in, I said I called it like triangleception because we're in a triangle through here, I think. Let me go into a different chart and take off the candlesticks. I don't like the candlestick charts as much. I used to only like candlesticks, and I started looking at lines, and I was like, oh, that's way better. I was speculating that we would enter this triangle before it showed up. Amazing, right? And actually, this is probably where that touch point is for 1, 2, 3. And now we're starting on our next 1, 2, 3, our ABC move down. Going to be testing 427 soon, I'm sure. There's an uptrend present through here. It's not truly an uptrend. This is more of a pattern, a trend line, not really a true uptrend, because the highest point after the lowest low has not been breached yet, and that was at like 455 right here with the close of 446, and the peak we had earlier was a close at 453. If I turn on the candles, that might change. Let me think what the high is here. What was the high here? 437, and what was this high? 447. Okay, yeah. On all accounts, it looks like it's not really an uptrend. It's just a chart pattern trend line. Maybe that's like considered an internal trend line. Whatever, don't care. We're definitely moving through a corrective pattern now, heading for the other side of this thing. We should get 5 touch points. Typically, you see these triangles start offset to the trend, the end of the trend that preceded them. That is to say, I kind of expect this to form not off of this low, but off of the next like end of reactionary trend, which makes me think we might even do this. This would also be a pretty. This is what I'm talking about. Pretty good speculation, especially if we have a motive wave count like wave A that ends right here. This reactionary trend corrects this trend, right? And then we'd be calling this wave A, and then wave B would end here at that 457 target. I mean, this was a clean correction roof, just so standard. And now we start counting our next C wave, which actually is an extension of wave B. Oh, I get why that happens. Oh, okay. You ever see like a triangle or a wedge and there's more than 5 touch points and you're going, how is that happening? That's probably what's occurring, is that you're getting this correction and it's wave B and then it's extending. Of course it's extending. I'm going to leave this here. I had this trend line back here, but no, I like it better here. This makes more sense. Now in this triangle, this horizontal, is it a horizontal triangle? 1, 2, this looks like a motive wave kind of, doesn't it? But we're calling it ABC, ABC. I think that's fair. Yeah, there's this motive wave's inside of wave A. This is about, yeah, no, this is good. We're looking for 5 touch points, right? 1, 2, 3. We're making the 4th one today. Oh, and actually, we'd be looking for a bounce right now. Okay. To get that next touch point. If we don't, that's okay. Then we'll be looking at A, B, and then this would be C up here. Actually ending way up here because this high passes this peak. So therefore, it cannot be the second wave in a motive wave. It has to be part of a corrective wave. And in this move, we have a 3-wave form through here. And maybe actually this is A. See, this makes more sense. Yes, A, B, C. Boom. Okay, not too bad. Not too bad. Now it's looking really clean. What I particularly like about this chart pattern analysis is that the price is crossing between opposing trendline touches and not leaving a lot of blank space in the chart. It's pretty even. That's really important. I think that I see a lot of chart patterns where people are using consecutive trendline touches for like the majority of the pattern, and that doesn't really count. That's not the idea. The concept is that you have a series of reactionary waves, of waves that aren't going to make progress but correct, extending sideways, you know? I mean, because they're reactionary, they're correction waves, they literally can't make progress, like theoretically. If they do, then they become motive waves, and then you start your next motive wave count. And so if you get a series of those, they literally are always going to be moving in a converging way, which we definitely see here. Yes, we do. And this first push down and this push back up are almost as tall as each other, right? Because the close here at what was this? I need to zoom in a little more. Okay, I'm gonna let my cat at the door. She's just like meowing at me. Can I help you? Yeah. Okay. That was just like way too annoying. See if she wants to come up here. Come here. Come here. Yeah, come on. Get up here. She's annoying. Yeah. Let's go. Here she is. Yeah, okay. There you go. What was I talking about again? I think I was talking about yeah, if you hear her meowing. I was talking about this triangle and how opposing trendline touches work and such. This is just a good chart pattern. I like it. We're looking for a breakout. If we do break out from here, that's very possible. Then we'll just be calling this again A, B, and C. Pretty clean stuff. If this does break down, then we're going to reach these lower targets. Not so great, right? But we don't have that breakout yet. I'm going to need to tighten my mic so that the cat doesn't just... Oh, I can't tighten. That's where it's broken. Yeah, my mic's actually broken. This thing pops off way too many times. One time I popped it off by accident and landed on my balls, and it was like terrible. Like, whoops. Let's go to GameStop. See how GameStop's doing today. I was expecting some sideways grinds, and I found myself drawing this pennant at some point. This makes sense too, and this actually now looks exactly like AMC, right? Where you have this motive wave pushing down, and then you have a reactionary bounce, and then you have the start of a corrective extension, which probably is actually starting here. Again, this is reactionary A, B, and C, where this A, B, and C wave is kind of like, it looks kind of weird. It goes up, it comes down, and then it terminates. I think they call that a running flat. I don't know. It just means that the impulse of the corrective wave heading higher was pretty small. This is a hint that the next downtrend is going to be pretty big, and same with the horizontal triangle forming through here as well. Let's have a look. 2072 or 1796. Probably 1796, given the weak nature of the reactionary bounce from this push lower. And we have to get that downward breakout first. Technically, when you pass the bottom of that initial impulse, you confirm your next move. But here we're seeing that extension start to build out. And so we probably just are going to watch this bottom trend line for that break. I wonder what this line is. Oh, I remember what that is. I've been looking at GameStop in this way, and that it might be part of some sort of rising diagonal through here. And everyone says these things are always bearish. They are not always bearish. I found one of these in SLV, and that thing took off. It's a lean diagonal triangle. It could be where you got impulse. You have this, of course, you have the wedge shape, the converging trend lines, and they're tilted upwards, and they typically are, well, at the end of a down. Here's the thing. A rising wedge is going to form, a rising wedge is actually an ending diagonal triangle. So what you're looking for is in wave 5, you're looking for the converging trend lines. And then also you're going to be watching for a 3, 3, 3, 3, 3 waveform between opposing trend line touches. Otherwise, if you have the quote rising wedge or ending diagonal at the end of an impulse heading down like this, and then you have this turning up, this probably is actually a leading diagonal triangle because we've already had a reversal, right? An ending diagonal triangle signals the end of a trend, and a leading diagonal triangle signals a new trend coming in. That's kind of what I see here. And what I learned when I was looking at SLV was that this is typically based off of wave extensions, where you get 1, 2, 1, 2, 1, 2, and now you have 3 motive waves that are all going to complete their counts heading higher. And that's how we see these extensions really start to build out. Like, it's really common to see the third of a 5-wave motive wave extend, so that third wave gets 5 more waves in it. Well, if that third wave gets a third wave, that's also pretty bullish. If you get the 1s and 2s over and over again, price could explode, which is really cool. And that could happen here. I'm not saying it is going to happen, but theoretically, what that would look like is this, basically. And there are some news events through here which kind of created this weird crisscrossing of the pattern on this side. I'm thinking this might be 1, 2, 3, 4, but this might need to be 5. 1, 2, 3, 4, 5. Yeah, so if we actually start at this low, that'd be good. Yeah, that could work. We could do that because the first, is it a 3 or a 5? Where's my book? I need to keep that book handy. Like, I don't want to have to guess. It's alternating 3 5s. If that starts with the correction from an impulse wave, then you get that first 3, then 5, and then 3, and then 5. And that's, yeah, that could be it too. I can really see GameStop doing a lot of different things. I've got targets at 35.13 and 17.96. They're unconfirmed, and it's all just based on this one pattern. Once this pattern breaks out, we're going to start getting some answers. But for the time being, it's mostly just a lot of confusion. Could be grinding sideways for a while. I mean, the RSI here is getting real small in the daily time frame. To me personally, it looks like we could see a big push higher. Honestly, like, implied volatility through here is increasing with the price. That's pretty bullish. And we've seen that, of course, reverse as price begins to head down and correct. All right, so this is probably a 3-wave form, actually, A, B, and C, which means this would be a 5 if we cross. This has to be a point. These have to be points. They've got to be points. I got to pull this thing down to show a few overthrows and underthrows, but I mean, I think that's really it right there. This could be 1, 2, 3, 4, 5. And I'm pushing down for 6. 6 waves is weird. 5, 4, 3, 2, 1. Or better yet, like we decided with AMC, is that we want to start this pattern not at the end of an impulse wave, but at the end of the first reactionary wave to the impulse, which would be that counter trend pop, which breaks that downtrend. And then 1, 2, 3, 4. 1, 2, 3, 4. Yeah, see, the count still is weird. It's still weird. How am I going to do that? 1, 2, 3, 4, 5. This has to be like a 6 or 1, 2, 3, 4, 5, 6, 7. I don't know. No price targets on GameStop yet. Let's see here. Cap, when we can expect any significant move in AMC? I don't know about any timing. Timing's really hard. I don't really like whenever I do give time frames, it's really difficult. Like on Playboy, I'm like, ooh, we're gonna test $2 here in the next 2 weeks. And I'm like, I hope so. Yeah, I'm all good, dude. I'm doing great. Let's play Fortnite. Please show Cap plus GME is going to 35 next month. Okay, well, this is the Cap. She was bothering me, so I just went and picked her up. Yep, say hi. Say hi. There you go. Okay. And I mean, it could, yeah. Wait for the upward breakout here. I'll put the bullish continuation level down. It's probably right there. We'll label this bullish continuation confirmation. And we'll make it green. We'll make it big and fat too. Let's do it. That's the big one. Yeah. Yeah, she says hi back. Her name is Halsey. We named her after, well, Halo. But if you're a deep Halo nerd, you know that Halsey got her name from another Halsey in real life. Let's talk about some other stocks. How about BBIG? Let's go see how that's doing. I've been tracking a downward breakout from the end. This is a good example of what a rising wedge really is. Right here, you have the top of a C wave, converging trend lines, 3 waveform as you proceed up, breaking down now, pulling up. So we're in step 2 of the reversal process. Step 1 is break the uptrend, which this is actually really is an uptrend through here, which we did. And then what happens is the price either comes back and touches the trend line or it tests the breakout price. And right now we're seeing the price right now bump up against that level. Step 3 is when we set a new low, and that's where our price targets come in. And all of a sudden, oh wait, here comes the extension tool, right? We'll see if this level holds. There's some values through here that actually has support. We should expect them to be resistance now. It's also near this peak back here. Let's zoom into the 1 minute time frame. See what it looks like. Choppy. Okay, and RSI is just about at overbought. Volume here is a little pop there in volume, but it's not super high. Implied volatility is not really. Implied volatility does weird things on the minute time frame. It really does. We'll see what happens. It looks like our uptrend here moved a little bit, so price could be spinning on that uptrend. I'd be expecting a little bit of spin here, which means on a larger time frame, we would see that as the price coming back up to the trend line somewhere. I don't know. And then doing this number, and we get confirmation as we pass that low. It's a guess. It's just a wild guess. Okay, BBIG. Let's go look at QQQ. I wanted to talk about QQQ. Let's see, because if you're a longtime follower, I was very bearish for a while. And when we passed 313, I had to put down these other bullish targets, because all of a sudden it just didn't make sense to be bearish anymore, right? Do I have another drawing set here? I don't, but I'm kind of showing this. It's possible a leading diagonal triangle there. Let's go to the default drawings. We broke that downtrend coming in, set a new uptrend, converging trend lines, right? But again, it's not always bearish. In fact, maybe I should break this down and show that. 5, this could be 3 through here, but it looks like very 1, 2, 1, 2, 3, 4, 5, 4, 5. That looks like 5. If this is corrective for 3, 5, 3, can I get a 5 waveform through here is the question. That'd be proving a leading diagonal triangle in wave A, and then of course the big rally would follow. Being bearish bears more risk now. Buy the dips is the motto. Yeah, that's how it goes with these big index funds. Money's just pouring into them. I am a little worried that they're mostly just overvalued, overinflated. We're getting back into that overly complacent position that this could be wave 5 at like a cycle degree level. Let's just get a blank chart going on QQQ. Look, we've significant level reached that 161.8 extension, which was essentially measuring this reactionary wave as an impulse. I mean, it looks pretty motive. That bounce that follows leads up to there, and I mean, this is just looking really bullish. Momentum is obviously in the bulls corner, 100%. And this period of sideways grind could be like, let's look at this. This is like the reality, is this could really be this, where we could, 420, where we see 420. Oh, I wonder if, you know, one time Elon Musk he tweeted 420. And it's like, why? I don't know. It's a good price target for QQ at least. YOLO 100x leverage SPY. Wow, 100x leverage SPY YOLO. I don't know, man. That's ballsy. I gotta tell you. If you do that, let me know how it goes. I'm like too scared to touch SPY. I've had my worst losses on SPY. Honestly, SPY is not my friend. Nope, not a little bit. Not even a little bit. Like, let's open SPY really quick, and then we'll look at QQQ. SPY. Okay, so here's the thing about SPY. This horizontal triangle shows up, and I know it does. And I'm expecting wave E to overthrow this AC line, and it did. And then we had this big reversal. And so I was like pretty bearish, but we didn't get the bearish confirmation. And price started pushing higher. And so I said to myself, this is a corrective ABC wave. We're going higher. And I actually like went long into a SPX ETF, and I ended up stopping here. I stopped out like before 420, and thank goodness I did too, because price rallied like crazy. What date? When was that? Yeah, the end of May. That makes sense. That makes sense. Do it. He bought AMC, so he is ballsy. It is ballsy to buy AMC at this point. It really is. It's, I don't know. It could recover as a company. We could see some bullish moves out of AMC. We could. If we get a reversal here to the upside, yeah, it would pop. It'd pop a lot because the analysis doesn't favor that. Nope. Anyway, so I stopped out back here, and I was still bearish on a few things, but this is really starting to shape into what looks like a third wave extension in a motive wave heading higher in possibly what's going to be a cycle wave 5. And so we're looking at waves 1, A, B, and C for 2. And then we start wave 3. We go 1, 2. Oh, 1, 2. Double 1, 2, right? So we're going to have 3, 4, 5, 4, 5, which means sideways grind. Sideways grind. I was trying to figure out why we would have sideways grind. And I was like, why don't we have like a big crash? Like, we're supposed to have the big crash. And what I was really missing for a long time is the concept of alternating corrective waveforms. Let's talk about that for a minute. There's a big uptrend out here. I mean, it's huge. Let me zoom out like more. Okay, here we go. Oh, something to know that this wave count is based on Frost and Precher's wave count, and there's a book back there, but I won't go grab it because kitty rules. They place waves 1 and 2 back here in the Great Depression, the crash, right? Of when was this? Like, it's kind of interesting. Have you ever actually gone and looked at this? Market peaked in 1937, came down. Oh, hold on. Here we go. Yeah, 1929. There it is. Big crash. And then look at this big push higher, right? Look at this. Right here, people would be saying that it was all over. Everything's going to be great. This is where I feel like we are. We've gone through a pretty severe, it's not even a severe correct. Like, this is ridiculous. From 31 down to like $4. Holy cow. I don't think we're looking for that same volatility. But you can imagine how bullish people were back here. And then it still actually took like 1, 2, 3, 4, 5 to 6 years before we saw price start to recover. And then we didn't even break this high until 1946. But then when we started going, it was going, right? Look at this channeling too. It's just so impressive. I'm really happy with this analysis. It's really big, like on the time frames. You can see me through here trying to find some trends. Probably on a smaller waveform. Looking at this could be a good example of where we're at. Where even if, okay, let's say the year's 1965 and you're at all-time highs, and then you spill. Okay, how far is that downtrend right there? It's probably going to be comparable to what we're seeing in SPY right now. what is this? 17, 18%. Okay. So at the extremes, it's probably about where SPY did. Look at the price rebound in a three-wave. Let me zoom in a little bit. In a three-wave corrective form. Let's just go whoop, and then we'll go like this. And let's try the extension tool here on the monthly time frame. If this is the top of that impulse and the bottom of that correction, the target's 106.81, and you can see the close here at 108.37. So $2 on. I mean, this is a pretty good. This is target hit right here. And sure enough, that is only corrective. And through here, you started seeing new this was a new all-time high for SPX. And then you had a retracement and then a new all-time high over the course of about a year. And then you see a lower low from the dip from the top of wave 3. Like brutal. This is brutal. These trend lines are drawn on a weekly time frame, so you can see like how much further the price did drop, but that's kind of like a little more nitty gritty than the big analysis here. So this is why that's kind of where I'm at with SPY. Is the market is full of all sorts of examples of these very long corrective trends. And you can even get new all-time highs and still be in the corrective trend, because wave B is going to be agreeing with the previous wave. And so if there's any like overly bullish, or if there's any more money, I mean, it makes sense that if wave B agrees with the previous trend, that the people who are still stuck mentally in the last trend are going to buy into that, right? So if you're still mentally stuck in the bull market in wave B, and you start buying into the ideas that everything's fine, this time's different, right? That's what the whole trope is. Then comes the big spill, and then you get this lower low. Even if you went long here, oh, this is the buying opportunity of a lifetime, and then you get this big push higher, and it's like, actually, this was the buying opportunity of your lifetime right back here. Then price pushes up. Oh, and then finds another low. Can you imagine how back and forth everyone? This must have been so confusing. Are you bullish or bearish? Because next year it's probably gonna change. In fact, it almost looks like on a 1.5 time year basis, you saw those reversals occur. Yep, and then boom, huge surge in the early 80s, right? What happened in the 80s? Well, I'm pretty sure interest rates went way up, right? Is that what this is? I think that's what that is. Anyway, what I'm getting at is that we're looking for an alternating waveform through here, okay? Oh, and this is why, I see what I'm saying. Oh my goodness. So this is 1, 2, 3, 4, and then an extended wave 5. This could be, like, if this was wave 3 and not 5, I wonder what that would do for my analysis. But I think I actually chose to do this because of the alternating waveforms, right? You got a little triangle back here from the Great Depression, and then you got an expanding triangle here through the late 60s into the late 70s. And then we complete this super cycle wave degree 1, which I'm saying peaked out in like 1998. Oh, and this is a, let's see here. Cycle waves 1 and 3 at the cycle degree are nearly equal. Wave 5 is therefore expected to extend. It extended 1.618 of 3. Okay. This is why that was, okay, I'm like, why did I draw it like that? This is why. There's some Elliott wave tendencies that would assert that. And what's interesting too is when Frost and Pretcher did their wave count and wrote that book I keep referencing called Elliott Wave Principle, they were speculating that we were going to see a big top in the market and a big crash in the 90s. That was kind of what the wave count was suggesting. And there was, sure enough, dot-com bubble and a big correction, 2008 financial crisis, but, you know, life goes on. Whoop, there it goes. And so I'm thinking to myself that we probably could be looking at waves 1 and 2, and 2 being sideways means wave 4 is going to be sharp, or a measured move down. And that's why after we topped at super cycle wave 3 up here, I'm looking for wave 4 to be pushing lower. Yeah, so I went back to like 1930s to figure out what kind of correction I was looking for now. And so when I zoom in on the weekly time frame, this looks terrible on the weekly time frame. Let's go to the daily time frame. I had to figure out where the top of the motive wave was that preceded the downtrend. And so I decided on the cycle degree that this high, probably right here, was approximately the same percentage gain as wave 1. This cycle degree, or this cycle motive wave, has really fractal the price higher. It makes sense for wave 3 to do that. So again, this is the top of wave 3 at the super cycle level. It makes sense to me. And because it was a fractal, we went totally exponential. And so we use the percentages to measure relative heights of waves and not the actual price ranges. It does look like what's happening now, a repeat of the 60s, 70s, 80s. Absolutely. Yeah, that's right where I'm at. Markets are simply moving through a corrective cycle, and the cycles are so much longer than the news cycles. You know what I'm saying? It's like really like inflation data is the only thing that really dominates the financial news at this point. Remember, there was like in 2020 and 2021. There were some like questions about the bond market and liquidity in the bond market and how is it functioning, and some concerns about a recession, and people were really scrutinizing the Fed, and all that attention just on the Fed created this like fixation on consumer price index data. I hate it when people call it inflation. Personally, it's a pet peeve of mine, because inflation, and I was taught this years ago, but when you inflate the money supply, you are increasing the money supply. It's about how many dollars there are in the world. That's what inflation is. When prices go up, that doesn't necessarily directly have to be related to the amount of money being printed. Bear with me. As the economy grows, you need more dollars to buy and sell all this stuff. Right? And so as long as your GDP and your inflation are a match, which the 2% and 4%, there's supposed to be a little bit of give there. That's why those targets are very similar to each other, right? You want inflation to be just below growth. I think that generates the environment that is preferable for big business. At any rate, so when we all say inflation, we're not really talking about the amount of dollars that are in the world. We really don't. But I think it's what we should, because consumers get price gouged, right? There doesn't have to be necessarily a weak currency for prices to skyrocket. It could be some other natural market force like a supply shortage. So we got this huge fixation on inflation. Inflation fixation. Inflation fixation. Yeah, we'll do something like that. Or write a little like jingle or something. Anyway, it's dumb. And something else too is, remember, the stock market is not the economy. This is not a barometer of the economy any more than a stock's value is related to its fundamental value, which, as we all know, the markets don't represent fundamental value very often. They don't. And when they don't, that's the opportunity that the investor is looking for to either go long or to short, right? If a company is undervalued, if its stock is relatively cheap, then it makes sense to buy it and wait for the price to come back up, and then you sell it when it's off of sale. Or if it's, overvalued, then you short it. And shorting is a whole thing. It's like, oh my goodness. Why do we need to have futures contracts for stocks? That's what options are to me. You get a gold miner, of course they want to short gold, because if the price of gold drops while they're mining it, then they're losing money mining it. Why not sell some of it then to hedge? It makes sense. But with stocks, who really needs a futures on stocks? Not the trader, although we can use stocks. You can use contracts to make money and stuff. Contract trading is a thing. But yeah, for retail to do it, it's kind of just like greedy. It's a good way to lose money too, and make money. It just depends how you do it. Obi-Wan sells a lot of puts, or he's selling puts right now. And selling puts right now is a great idea, honestly. Have you seen what the market's doing? Oh man. Let's see here. Yep, makes sense. 2%. 70s inflation had as much to do with oil embargo as managed currency rates, creating a stagflation environment. 70s inflation has much to do with oil embargo. Really? Oh yeah, I see what you're saying. Yeah, because multiple market forces, right? Yeah, absolutely. Nvidia is the perfect example of that. 1 trillion market cap. Wow. Yeah, is Nvidia really worth $1 trillion? That's like the question. And then there's also this whole thing about the value of an equity. What is the value of an equity? If a company is paying dividends, then the equity has that value of the company's profitability. But if you have a stock that's not paying dividends, why would you hold it? Unless you believe that's going to be worth more in the future, unless you're speculating. Yeah, speculation dominates the market right now. I think that's mostly all anyone is doing. At least that's very broad, very general. But like that's what I see the most of, I think, in social media is speculation. Less like fundamental analysis, which is why I like Playboy stock, and that's why I'm holding it long. It's because I look at the company at a fundamental level. I'm like, okay, I get it. This I think is going to be good later. And of course, my timing just always sucks. So the majority of my position is in shares because this will just sit there for a while. Let's finish this thought on SPX. I was looking for a zigzag down. I just don't see a zigzag yet. But price is coming up too high to be really in a zigzag, which makes me think that actually this wave 5 top, and I do this all the time, we get to the top of a wave and we start heading down, and I'm like 5, complete the next motive wave higher, move on, start the corrective trend, and then I get confused in my wave degrees during the correction cycle. And I think the reason for that is because this is the top of a smaller wave degree, right? It's probably not the top of the cycle wave. Cycle wave 5 is probably out here, and it's probably at a big like double top-ish level somewhere in this 480.26 range. That makes sense because this looks like we're extending right now, doesn't it? Let's just do this number. I don't know. Let's see. That's pretty close, isn't it? I mean, just roughing it with that other extension tool, we get that 48.26 if this is a 3-wave extending. 1, 2, 3, 4, 5. We get 2 tops over here. We get 2 tops here. We call the fractal out, and then this will be the top of cycle wave 5. And we might see some fundamentals improving slightly, but we won't see the same growth that we saw in this explosive 3-wave. That's typically what we see in wave 5, the per Frost and Pretcher Elliott wave principle. And so that we are climbing, it does make sense. It does. And when we got above the August high through here, 4,300, that's when I said, hey, we got to talk bullish here. And really, you know, every peak through here, these 2 peaks were, of course, bullish target triggers. And so at that, yeah, bullish reversal confirmation at 41.79. Yeah, there you go. This is when you should flip off bearish hardcore. And that's where I did it. So I didn't do too bad. I didn't. I was expecting more downside. You can just see how price, like, flip this upside down. That's what I was expecting from this point on. Anyway, let's go look at blow off top confirmed. Yeah, basically. Let's go to NVIDIA and have a look here because we were just talking about it. This is another one of those charts. Let me turn off log scale, right? Come on. Like, we aren't going to look at this chart in 10 years and say price mountain. Have you seen price mountains? This is what price mountain looks like. You get big push down, big push higher, and then you've seen it a million times. Price comes down, and then it just like languishes down here for like a long time. And I'm not saying that we're going to do this in NVIDIA because honestly, I mean, it's pretty clear they're going to be around for a long time and have a lot of success and make a lot of money, right? Unless something terrible and unforeseen in the future happens that totally disrupts everything about the way they do business, which I would doubt. I don't have any indication that that's going to happen. But, like, you know, let's go to Sundial. I think Sundial did it. Let's see. Let's go to the weekly. Yeah, there you go. 2 big peaks and then price just sinks, right? This is the first one that came to mind. I know I see this a lot in cryptocurrencies too. I think a good example of that is like basic attention token. I like the basic attention token, but it did the same thing where it just peaked out really hard. Let's go to NVIDIA again here, and we'll turn on the log scale again because suddenly everything makes sense in log scale. Did I just turn it off? No. Let me, wow, is that really what that looks like in log scale? Oh my goodness. I mean, it doesn't look as bad, right? More ABC-ish. Let's even just do this. Let's do the big ABC. Let's do it. Let's go from the IPO to the top of the first impulse in 2021 and down to the correction cycle through here. Dude, we get a target at 41. That's funny. I'm going to make it blue. That's my favorite color here that I use. Wow. And we'll make it fat too, so we see it. That's so dumb. And that target would have confirmed here at 329. If 481 hits, look at that. That's crazy. Look at how close these other targets are. I guess it makes sense. It makes sense because Elliott wave principle works, and I could probably like explain why that happens this way. This looks, wow, this on the monthly time frame, this is just, or on the weekly time frame, this is, it's like, it's beautiful. Like you have to just like be like, wow. Zooming to the daily time frame, we get a little more detail here. We can see the bearish divergence, which I say watch to break sometimes, right? Because you're finishing out the top of a smaller wave degree in that first set of divergences, and then the drop out of overbought is the corrective cycle of the larger wave degree, and then the next push up into overbought is that same wave degree, and it's completing its bullish cycle. And so I kind of speculated we get some sort of rising diagonal through here. Looks like I might be doing this on the hourly time frame. Yeah, on the hourly time frame, that looks really good. I like that. And then, you know, it's possible too that it's not doing what I think it's doing. Right? You see how that could easily turn into a channel? But we'll see. It's going to have to break these resistance levels marked by the targets, right? Multiple targets here. This one measures the impulse off of the earnings flag. Price target reached. There you go. Was that today? That was yesterday. NVIDIA price target reached yesterday from the earnings flag. I mean, look at that. From this little tiny movement in price, was able to forecast that, and that is a confirmed target. And we did get this big consolidation, which was a bullish thing. And then boom, there you go. You get to the target. Ta-da. And then guess what? This one as well, I think, is the next one. Right? Yeah. So crazy. And this is the initial impulse of... It's actually... This is interesting. I wonder if this is like 3, 4, and 5. I don't really have an Elliott wave count through here. You're gonna notice that, and I start to lose track of chart patterns because my Elliott wave principle analysis really guides all my chart pattern analysis. Before it wasn't like that. I would just do the chart pattern analysis, and it was like cool. Like I have this shape here and that shape there, and then sometimes those wouldn't work out. When I learned Elliott wave principle, it really came into to my understanding that, oh, we're just simplifying this other form of analysis, which is more complicated. And then I learned that form of analysis, and I'm like, this is maybe complex in some ways, but in other ways it's very simple in that once you know like the first few principles, everything builds off of that. And so if you can master basics, then you can expand your understanding, and eventually identifying patterns in the future becomes second nature. Anyway, so NVIDIA target reached. Here we go. Awesome. Let's go look at AMD. Why not? See what AMD's up to. AMD, let's see here. I have wave A labeled here at the, is that the minor degree? And then wave B. And then wave C coming down would be completing wave 4. And we are currently hitting up against that resistance at 118, which was the first target. We could get an extension of this is wave C within this wave B, so minute wave C here may extend up to 124. We'll see that. I'm not certain how severe that correction will be. I am looking for some sideways grind through here, which could easily put us into some sort of triangle, all right, for a while. I was thinking that might make sense too, that we get a sideways correction. Everyone's looking for a big dramatic move, big push up or a big push down. What if the market's just like drift sideways for 5 years? That'd be annoying, right? BBIG moving up again. Let's go have a look at BBIG. And we'll zoom into the 15-minute time frame. Okay, there it is. Okay, so I was saying that we'd either see the test of the breakout price or the trend itself. Price has come up into the trend, and it's now, this is the reactionary wave to this impulse. And I bet you that, I don't think we're going to make it, but we're going to try. This could be on a small time frame, A, B, and C. But yeah, you can see that the price pushed much further than that. Zoom in. Enhance. Woo! Yeah, there you go. Being thrown up there. Let's, on pretty good volume as well. Gonna turn on some candlesticks here. This is where I need to know, is that volume resistance? Maybe. Maybe this volume spike is actually marking a top. Yeah, this moves like Playboy where you get all these like dojis. Not a whole lot of trading going on. We're going to zoom back out into the 15-minute time frame. And let's see here. Yeah, that looks pretty good, doesn't it? I think so. I think so. I think on this time frame, that's the low. And that's the low. I mean, yeah, we zoom out a little bit. Let's go up to the hourly time frame, see what that looks like. It looks like, of course, we got some price extremes. Trend becomes a little more shallow. See how that works. All I gotta do is change time degrees, and it's like those shorter moves that look more bullish become less bullish as you include them with a larger price or larger data set. Yeah, XO, how's it going, dude? How's it been, man? Yeah, absolutely. I would like to do this a lot more. In fact, I'm looking for a job right now. I'm currently unemployed, and I'm seriously considering taking a large pay cut and starting somewhere else new that gives me time to do things like this. Yeah, because I need to live my life and be happy, and I just can't let work be what I do. I want to be other things and then work, you know, like work I do because I have to, not. Okay, so I think that you mean Tesla there, Jeff Joe. Absolutely. I also see CVNA, so I'm going to go to CVNA and then I'll go to Tesla. CVNA. Unemployed's a pretty large pay cut. It is. It really is. Jeez. Okay, Carvana here. I don't know anything about this company, so if you want to just like give a spiel or copy and paste something from their website or a link to whatever they do, Alex, that's cool. Thank you. I will continue, XO. I'm getting better at this. It's more about like just reading the bias. No, not Tesla. TSLQ, says Jeff. Okay. All right, cool. SVNA, let's go monthly max. Let's get the big charts down. Holy cow. Oh man, that is woof. That is rough. Let's go ahead and do the analysis here really quickly. Can I get the extension tool? Negative. Okay, that's not gonna work. Okay, here we go. On the monthly time frame, you know, big uptrend and it breaks. It almost looks like a channel, doesn't it? 1, 2, 3, 4. 1, 2, 3, 4, 5. And then A, B, and C goes beyond the start of wave 1. So this could be A, B. Hey, this is a motive wave coming off the 2022 low, and that's important to know that on a very large time frame, the largest time frame, we're in an uptrend motive wave. That's important because that means that at some point, every wave smaller than that will also be correlated to that motive wave. Let's go into the weekly chart. And we've established the downtrend break through there. Look at this wave A extension through here. That's brutal. Right? Is this it? See, still negative. Let's go into the 3-year daily. I think I've got enough time frame there. And I might actually need to know where that trend broke specifically on the daily time frame. So we're going to go max available. We're going to redraw this. You can see it looks different. Always looks a little different. Oh, this is great. Look at this tiny little. This is so dumb. I'm going to do it. I'm going to go way back here to these 2 points, which are only. I can't even see like the hover tool is like floating off the screen, but it's like let's see. From May of 2017 to June of 2017, it's a month-long trend. I'm just going to extend it to the right. And we're going to follow this thing. And we're going to see how price reacts to it or if it follows us at all. Looks like we're pretty far away from it. Uh-oh. It's gonna hit eventually. That's pretty close. How close is that? 29.30, $5 or 29 to 25. That's a pretty big range. What's it look like in context? Pretty close. And then look at that. You can see that this reactionary trend up after this massive spill down. Well, the reason why I did this is because I was specifically looking for that. Where did this big uptrend actually break? And it actually broke here So this low, this first low past that point, this marks the end of a wave A for me, which we'll put at cycle degree. Sure, that sounds great. And then we'll go wave B. You can see it's testing that trend, almost getting there. Pushing down to wave C. And so this is a motive wave, big bounce, push lower. Beautiful stuff. In which case, we can say that this is probably the beginning of the motive trend. And that is just huge. That's so big. That's too big. Incredible. It must be a percentage. If it's a percentage, let's see, 398 to, oh, $3. Yeah. So you drop 100x, right? Okay. This is perfect. We don't want to use like actual price ranges. We want to use percentages. I'm going to go ahead and just take a line tool down. And that was 71%. Holy cow. And then we bounced. How much did we bounce? 43%. Okay. And then we fell again. What's this? 86. So 71 and 86. Wow. We're going to take the overall trend through here. What was this? 94%. Oh my goodness. And what's this? 92%. There you go. So we're looking for wave A and wave C to agree in amplitude, like size. Doing this on stock that's moved exponentially lower, you're going to want to use the degrees. And we actually get a similar degree between waves A and C on the largest time frame. There is also some agreement between two of the waves in wave A. If this is a measured move down, this could be a motive wave count through here with a third wave extension, which is why that doesn't meet up very well. But we've definitely got it at this higher wave degree. Oh yeah, here you go. Is this a good price mountain chart? Let's look. Use log scale. Yeah, there, see? Kind of like this. Big peak, dip, big peak, and then boom. And look at this. Wow, on a line chart, that is a beautiful rounding bottom. It really is. Yeah. Huh. And I'm going to take a note here that it's formed by wave C. Yep. And then the heave that you see, this is so cool. We're going to go into, let's see here. I need to figure out which browser tab I want to open up. I think it's this one. We're on Twitter, PirateSite.com. We're going to look up rounding bottoms here. Sorry for the bright screen. I know my retina's hurt too. Rounding bottom. I think Bulkowski actually mentions that there's a heave bump. Price may shoot up midway through the turn. Bump. Do you know what that is right there? See this bump? Do you see this bump? Look at this bump. Look at this thing. I'm gonna blow up. Look at this. Bump. Bump. That is right here. Right here. And it's wave 4. 1, 2, at the cycle degree. 3, 4. Sometimes I make those cycle wave. This should be 1 degree lower and C should be higher, but that's wave 4, and then you truncate into wave 5. So wave, and this is also a bump here. Wave B or 4, corrective wave. The bumps are corrective waves in rounding bottoms. Something to take a note of there. I want to really learn and kind of maybe even document those sorts of relationships because it's super helpful with like wedges and such. It's got to be helpful other places too. Anyway, so we're definitely correcting. We've definitely come to the bottom of a corrective wave. Probably our impulse starts right here. We're going to go back into log scale here. And you see what I'm doing is I'm just trying to figure out where I'm starting my motive wave count and where it's going to be relative to the larger wave degree. So we know that this is a huge point right here. That's a significant level on the chart. And it's like, really? Yeah, it is. Maybe it's even in the middle over here. Just looking at the volume here. Anyway, let's zoom in into the log scale. There we go. There we go. Is it making more sense now? Price bottomed down here. This double bottom that marked the end of the C wave that helped build that rounding bottom. Now we're pushing up, pushing out. 1, 2, 3, 4, 5. It could be. Yes. We're going to go from the lowest low and start using our extension tool. 1, 2, 3. So I do this so that you can just see that, you know, the next wave that follows can be a 3 wave. And then I'm going to do it again for the 3 wave to see what its relationship is to the next wave. Okay. This could be 1, 2, 1, 2, 1, 2. It could be, and we're just going to get these big now fractaling waves higher. We could be building into that for sure because look at the size of each impulse wave. It gets a little bigger. Zoom in again. And let's draw some lines. Let's do a little bit of measuring here. We had here a $1.32 rise, 35%. Here we had 361 for 81.67%. Here we had about 795 for 122%. Okay, we know that each of these impulses heading higher agrees with a larger wave degree, and it's increasing at an exponential rate, right? Crazy stuff. I bet you that I can get away with drawing some sort of like diagonal through here of some sort. I don't know. Looks pretty channely, right? Whew. So this might be 1 2 1 2 1 2. And the reason why I say that is there's also not any alternation in these waveforms, in these corrective waveforms. They're duplicate copies of each other. Let's zoom in. Let's go to the hourly time frame, and I'm gonna need more time. I'm gonna need 100. I need a whole year. So let's go back to the area in question, and this is definitely a copy and paste image here. Do you see this? That looks like that a little bit. This looks like that a little bit, right? The idea is that in every single one, we have kind of this same corrective form. So there is absolutely no alternation here. This one actually came cleanly into a flag, which of course didn't work out, right? You see the price just fall down. Yeah, pretty much once you've reached a certain time frame on a flag, just forget about it. It's not worth it. It's probably not gonna happen. But here's my point: is we could be very well seeing the price here about to make a big move, and it's already started. Maybe it's already done it. Don't know yet. Haven't looked at where the targets are. We're gonna go through here. And we're gonna try to figure it out, and we're gonna start by calling this top of wave 1 at some degree. And since I'm saying that we're probably gonna be extending at least 3 waves, I should at least use the minute degree. I'm gonna bump it up one more to minor, a little higher. Let's see here, 1. There you go. And then we're gonna have A, B, and C. And you can see how like it's hard to see A, B, and C because of all the fluctuation in the price. That means that this wave degree is probably not gonna be for the hourly time frame. It may be, maybe my wave degree does. I know some people that like take wave degrees and match them up with time frames, and I'm like, whatever. I don't believe it. I don't think that's gonna matter too much. It could though in the future. I could flip-flop on that, so be careful. Let's go over to wave 2 here. See, this is way easier to see that. And wave C did not push beyond the impulse of A, which I'll also label A, B, and C. And then we start wave 3. And how high is wave 3 going to go? Well, I always like to give it to the 161.8%, which we've blasted through, right? Wow. Wow. Beautiful. Beautiful. And this is so funny. I'm just going to do it. This is 1 or A. This is 2 or B. Because we always start... I mean, we know that this is going to be a motive wave eventually, but it's still a reactionary wave to this incoming downtrend. Does that make sense? Let me just draw that really quick. And again, I'm going to... This is annoying me. Make this green, please. I'm going to use these 2 points, which are actually pretty close together, to decide what that trend should look like, despite it being a very close like time frame. That's what's unique about that, and that's why I keep pointing it out, is because typically you want your data set to match your forecast like in time length. So to use 2 points that's close together and then forecast that out is like unique. And so yeah, there you go. You can see the downtrend breakthrough here. And you can see how price came down, tapped that trend, and then reversed later. This is what I'm talking about. Spotting reversals is huge. If you can spot a reversal, you're going to be able to make money. Well, eventually. Learning to trade is another thing. But waves A, B, and C correct. So this breaks the downtrend. Very common. And then if we get waves 4 and 5, then we'll relabel the whole wave motive, right? But for right now, it's A, B, or C. And so we're breaking into a C wave, which is just going nuts through here. Looking for the top of C is probably going to be like counting a wave extension, where we're looking for that third wave of wave C to extend. So here's 1, wave 2. Wave 3 came up, peaked around here. We're probably in wave 5 right now. We're probably in wave 5 of this smaller degree. So if C is being drawn at the minor degree, then we're going to start labeling this wave extension in the minute degree. And I like to put a circle next to it. Ideally, you put it in a circle. Just trying to follow the annotations that are most commonly used. The way Frost and Pretcher do it. So then we get wave 3 coming up here, and wave 4 is some sort of sharp. Let's see. This is probably wave 4 right through here. It's really tricky. It's very small. Wave 4. Zooming in. And this probably will look better on the hourly time frame now that I'm going down a wave degree, right? I'm gonna look. This is what I'm thinking is wave 4 right through here. Let's zoom in on it. And enhance. And enhance. Scooch. And let's do some magnets here. 100% at 2175. Price bounces right on it, exceeds it, reverses, spins on that level, and then pushes up. This is a great place to put wave 4. I'm going to duplicate this, and we're going to call this wave A. Duplicate for wave B. And let's observe this wave B for a minute. Let's study this. Yeah, that looks great, doesn't it? All right. Yep. There you go. 1, 2, 3, 4. Didn't get a 5th touch point. Didn't get a 5th touch point because you won't in wave B because that's not where that pattern belongs. It's A, B, and C. And this is some other double correction, maybe an extension. There's an inverted head and shoulder through here. Do you see that? And look at this. It even confirmed, I think, maybe, unless you call those 2 points the armpits. Nonetheless, price broke down. This is great wave 4, A, B, and C. Let's finish the label. Duplicates. Wave C. And I'm just doing this because I'm trying to find the top of this motive wave, or where it would tend to be. Not that I can predict it. Remember, the price can always do anything it wants, but it would tend to be at a certain spot. 1, 2, and then 3 peaks. Let's see, where did 3 peak? 1, 2, 1, 2, 3, 4, 5. Right here is this top of wave 3. 4, 5. A, B, and C is kind of sharpish. I'm definitely going to be missing exactly where it is. Let's use the RSI and see if we can find that bearish divergence between a higher high in the price and a lower high on the RSI. It's right here. Man, that looks weird. Right there. Okay. And that puts me to right there. Do you see that? That's probably where the top of wave 3 is I'm using that bearish divergence to help inform the analysis. There we go. Yep. It's top of wave 3. Label that correctly. There we go. And yeah, calls. I'm sure calls have been crushing it. Absolutely. Absolutely. I mean, look at the implied volatility. Back here, 108%. And you skyrocket up and you reach 219%. Calls did very well back here. Yeah, absolutely. In this push, absolutely. Because this is 3 of 3. Do you see that? Let me show you. This is something to like take note of. Like if you get a 3 of 3 wave right, oh my goodness, that's like the holy grail. Let's start the next wave degree smaller. Here's and I hate doing this all on one chart because it gets too cluttered. If there's 1, and then you have 2, 1, 2, 3, 4, 5, ending 3, going into 4. Beautiful stuff through here. What was the RSI looking like? Higher high, significant high, divergence through here. Do you see that M pattern? But then you get this higher high and there's no divergence. Price moves down at the bottom of the corrective trend, just about hits oversold, and then spikes twice. Wow, that is nuts. Look at that volume coming in. Implied volatility starts to go up and up and up and up and up. Beautiful stuff. Beautiful stuff. Okay, I don't want to label that at the minuet level. For 5, 4, and then so where's 5 going to be? Wave 5 should be about the same height as wave 1. And since we are moving exponentially, we're going to use a percentage target. So 103% was the amplitude of wave 1. And I'm going to use my extension tool then to determine what the top of wave 5 should be. And it should be $37, and we're extending. Jeez, double extension. Hey, you know what? That happened back here too, right? We saw a bunch of waves extending. Hey, what's this? Oh, yeah. Oh, yeah. Is that it? A. This is wave B through here. This is B. So we don't want to use it. Nope. Take it out. And suddenly, oh, the pattern gets way smaller. Way smaller. Take B out of your rising wedges, please. Take it out. Make sure you put it on the end of a different wave degree. And here it's actually A, B, and C on a measured move up for wave C. You see that? Target at 1321 from that corrective impulse, hits it, falls out of this pattern, reverses. And that reversal is relative to the impulse that preceded it. Okay? That's the correct falling wedge right there. Let's go check on BBIG real quick. I want to see what that's doing. Grinding sideways against the trend. Okay, interesting. Implied volatility starting to peak here. We'll see what happens. I mean, this random guess is turning out pretty good so far. After all, I was saying it would come up to that level, and that was actually the price we're spinning on. There you go, whatever. Some intraday analysis there. Let's go back to CVNA because we haven't quite figured out where the top could be here. That's the 1 minute chart. That's disgusting. That's nuts. Let's go to the hourly time frame again here, where we are now saying that wave 5 has extended, wave 3 extended, and wave 5 extended. So price is, I'm serious. It's going hyperbolic. It's trying to reach this uptrend probably. Watch for a reversal soon, because this is nuts. I want to see the candles. Show me the green. Show me the green. Oh, on a gap. Oh my goodness. Yeah. Okay. Top soon. Okay. I'm gonna put a note here. Top soon, but not forever. No, just top soon. Really, what I want to say is correction soon. And then I want to date it too, so I know what day I left this here, because Thinkorswim won't actually keep track of that for me. 7/19/23. Yeah, because duplicates. We'll go up here and we'll label this thing. Whoops. Edit properties 3 or C. And let's talk about gaps while we're here. Lots of gaps. Lots of gaps. And I know a lot of people put a lot of credence in gaps, or a lot of faith in gaps. This would be a breakaway gap, right? And then this would be a continuation gap through here. And this would be the exhaustion gap last. Yes, exhaustion gap. That means that this would be the last one before we start seeing gaps be filled to the downside. Remember, the only rule for the correction after an initial impulse is you cannot completely retrace the wave that preceded it, and that would happen way down here. So there's a long way to go that it could correct. We could really see 7. That's so dumb. Why does this thing move like this? What's going on that creates this? This is just wild to me. There you go. Yeah. Yeah, that could be it too, because it's all wave 3. So wave 3 is happening in this rising diagonal, which eventually just becomes probably a channel with an overthrow. And then we correct into wave 4 at a higher degree. Oh my God, that's how it can be happening. I figured it out. That's how it could be happening. Wave 3 is this entire thing. Okay, 4, 5. We're watching for a top. We really are. But if wave 3 were to extend like that, that looks really good. I'll zoom in on that. I like it. Let's see how it looks on the daily line chart. Not bad, actually. And you're going to notice that I'm not actually including the B wave here or wave 2 at the minute degree. Yeah, sometimes I guess for chart patterns you want to use your candles. This doesn't look bad though, I think, just like this, right? Needs to be on a smaller time frame though. Not that small. Maybe the 4 hours good here for this one. Anyway, let's move off of CVNA. That is crazy to me, just nuts. And let's get to TSLQ. TSLQ. What's TSLQ. Okay, investment managers series TR2 Tesla Bear Daily ETF. Oh, Tesla Bear Daily ETF. Wow. Hey, but you know what that is? Oh, look, I love it. Yeah, let's do more of these. Let's do more of these. Yes, excellent. Excellent. We'll get there. Show me monthly max. How long has this been going on for? Less than 3 years. Gonna go into the 3-year daily. This is all the price data we have. And it's gonna be correlated to Tesla, so I don't want to be like A, B, and C. I think that since the beginning of the year, Tesla's been in a big correction up, and the shorts here seem to be showing a direct reflection of that. Of course, using the Fibonacci extension tool here, it doesn't work because this thing was at 91 and then it dropped to 42. Wow. And then a 42% drop extended from 57 is like super. Wait, why was that negative? 100%. Let's do it again. So let's go click and 100. Oh, okay, it's showing me the 168 edit properties. Yeah, here. There we are. $10. Yikes. If we get the same percentage drop or the same price range drop, but we're probably looking for a percentage drop there. That's what that probably means. Don't get too carried away. Use a more conservative analysis. I mean, 52%, that's crazy. What's this? 40, 50% so far? Comparable, right? So A, B, and C. It still looks corrective. That's insane. A, B, and C. And the end of that C wave, guess what, is ending with a diagonal. Cool. I mean, of course, if this is an extension down, then it'll be a leading diagonal triangle. So we'll need to observe the waveform through here. Let's go ahead and zoom in to maybe the hourly. Can I get that whole trend on the hourly? I can. Nice. Let's work with this one. And we'll redraw that when we get there. Don't worry. We're going to start with this corrective B wave. And there you go. Between 100 and 161.8%. Maybe I got my magnets wrong through here. Let me clean it up best I can. And the low. Was it this low? I like that low better. It just, because there's an extension through, like a horizontal triangle through here that forms wave B at this small wave degree. Do you see that? And when you get that horizontal triangle in a corrective trend, you typically get a pretty strong thrust out of the next impulse, which was wave C on a small time frame. It looks like there may have been a small extension through there. Jeez. And then we started reversing. So pretty much the very tip of this is the beginning of our new motive wave heading lower for wave C. I'm going to go ahead and just connect these. Let's see here. Oh, the market's closed yet? What time is it? 12:44. 15 minutes left. And I'm going to connect those. And then I'm going to extend to the right. So, wow. Probably wave 1 through here. And then this is a third wave extension. Wave 4 and 5. And then we'll see the A, B, and C break the trend. That's typically how it goes, right? Let's go ahead and just edit this, and I'm going to leave it here like this. If I cancel the right extension, then what happens is I have to like guess where it is. I like to have it exactly where it is. So I'm going to leave the right extension on for now, and we're going to zoom in. We're going to say that we have a corrective wave, an extension sideways that doesn't pass into wave 1, right? I think so, yeah. So we get 4 and 5. 1, 2, 1, 2. Ooh, sideways. Okay, here we go. Let's start identifying types of corrections. That's a sideways. This could be a reverse triangle through here. And then we get a flat of some sort, so we get a sideways. I like that alternation. Okay, that could all be the same motive wave then, probably. We'll see. We'll look at the RSI here in a second. And then we get a sharp. This is a sharp for sure, right there. Look at that target, 100%, like a perfect reach. And then next motive wave down. And we know that if we're going to be looking for an extension through here or an ending diagonal triangle, That could be it right there. If this is a motive wave count, we get 1, 2, 3, 1. Oh, so let's do another 1, 2, 3 count through here. 1, 2, 3. Yup. Do you see what I'm doing? Establishing that these are clean ABC moves. And we're not getting any extensions. We're just correcting. 1, 2, 3. Come on. Come on. It's just like, yeah. We're definitely getting those 3 waveforms patterns forming this shape. And I want to say it's offset from the impulse that preceded it. Here's oversold a couple different times with a bullish divergence. This is probably the end of the motive wave. Right direction. Gonna put this up. And so we have this pattern forming in waves of 3. So the first wave of 3 enters the pattern. Nailed it. A, B, C, A, B, C, A, B, C, A, B, C. And I don't know what to do with that. That's... There's like 2 motive waves and a corrective wave 3 here somewhere. I don't know how to break that one up. We're going to take the top. I don't know, maybe this works. Through there. Maybe that fractals out a little bit more. Towards there. Maybe, is that really it? Is this going to be A, B, and C? Measured move down fractals. Confusing, but that gives us a perfect 28.24 touch there. How many are there? 1, 2, 3, 4, 5. Oh, yeah. Uh-oh. That's an ending diagonal triangle. True falling wedge. And I say true because this is the, this is what the falling wedge chart pattern concept is trying to achieve. It's trying to achieve an ending diagonal triangle. There you go. That was pretty clean, huh? CVNA on the daily, huge head and shoulder. Oh, yeah, CVNA. And that could break. Watch for that pattern to bust, maybe. That could still happen. Sometimes those chart patterns are less reliable than we think they are. This is a cool chart. I like this chart. I like bearish charts. This tells me a lot. So this is going to be the ending of an impulse wave C. Ready on the cycle degree. This would be wave 5. So wave 4, 5. Yep. So 3. This is all wave 3. You see what I just did there? Just broke this whole chart down. No problem. So we're going to call it 1 way back here. And what time? We're building a C wave at the... What degree is it at? Capital C, minor. So we're going to go minute 1. We're going to edit. Turn the indicator white. And let's do an extension off of that first little impulse and see how far we get. Boom. 100% down here, extension here. So 3, 4. It could be an extended 5 wave. 1, 2, 3, 4, and 5. Interesting. Wouldn't that be interesting? 1, 2, 3. But this is also a sideways correction, right? So it can't be wave 4. That's why it's important to watch the alternating form of corrective waves, because back-to-back side-by-sides like this can't be part of the same wave degree. They gotta be different degrees. So we've got 1, duplicate 2. I'm gonna get rid of this. Boop. And then we start wave 3 in an extension. So we go down a level to minuet. There we go. I'm gonna color this blue. Boop. And now we're gonna duplicate for 2 for cancel that. Edit this, call it wave 2. And then we're going to extend again. So going into sub-minuet waves. 1, 2. And now you see that we have 3 sideways corrections in a row that are all at different cycle degrees. Now this is like a perfect inverse of what I was describing with CVNA. Let's go back to CVNA for a minute here. let's see. Back here, you recall somewhere in the stream, I was pointing out how it seems like the price was just reiterating itself over and over again, and what that created was a series of corrections that did not alternate, and that would suggest that those three motive wave counts are kind of like in a queue waiting to complete, and they're all pointing up. And then yeah, you know, it happens, like, you know, wow, new highs. And I am like surprised that I'm looking at a Tesla chart. Am I surprised I'm looking at a Tesla chart, seeing the same thing, but like a bearish Tesla chart? I don't know. Given that I'm at the top of a corrective uptrend in a bearish Tesla chart, yes, that's perfect. That makes perfect sense. So here we have our three reiterations, three sideways corrections, and sure enough, that means that you have 3 degrees of extension. Insane. Look at wave 3 of this extension. It's huge. I gotta figure out where to end it. Let's go to the extension tool through here, and we'll just start. Is that 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 1, 2, 1, 2, 3, 4, 5. Oh my goodness. Is this 3, 4, 5? Oh man, that is wild. There's like more degrees of extension through here. To the best of my ability, I think that let's see here. This is a wave 2 was a sharp, so wave 4 is a flat. Maybe here or here. 1, 2, 3, 4, 5. 5, 4. Okay, doing it backwards is hard. Sharp, flat. These can be on the same degree. These two can't be. So, or they could be. That's just it, is that they're all their tendencies. 1, 2, 3, 4. 1, 2, 3, 4, 5, 4. I'm calling this wave 4 through here. It seems rather small, but I mean, jeez, those extensions are brutal. Maybe I can get that on the 15-minute chart. Get that far back? Yes, I can. Yes, I can. And maybe wave 2 was sharp. Oh, so I'm looking for a flat, right? Yeah. Okay, that makes sense. And so if this is 1, 2, 1, 2, 3, 4, 5, 4, 5. Is this really wave 4 back here? Oh my goodness. That's wave 4, which means wave 3 ends way down here. Yikes. Going back into the hourly time frame, we'll try to use the RSI to help decipher that a little bit. The tops and motive waves are generally overbought, oversold at this point. Yep. And 3, boom, the big one. Perfect. Yeah, the lowest low here. That's probably 3. Right there. And then 4 is A, B, and C goes sideways, which means, yes, it's a sideways correction, and also makes a lot of sense. Makes a lot of sense. Let's see if we can analyze it here. Wave C would be right here in this wave 4. Okay, nice. Yep, A, and then B, and then C starts. Offset from the low of that preceding wave. Very nice. Very, very nice. Okay, there we go. And that's rare for a wave 4 to do that. Wave 4 rarely does that. And that's probably because wave 4, because that wave 4 is specifically the fourth wave of a 3-wave, like double, like a 3, it's 3 wave 3s extending, and it's the fourth wave of the last set of 3. Does that? See, this is why Elliott wave is hard. Tesla earnings soon. Hopefully it runs. Catch you later. Watch your videos since you called AMC drag to hell. LOL. Hey, yeah, thanks for watching. Yeah, the AMC drag for hell was a drag. It really was, right? At this point, it's like, you might as well just keep following me, right? It's like, hey, that was a good call. That's like the best thing I've done is that like are those crazy forecasts with the meme stocks. Anyway, so here's the end of wave 5. And so we get 4 at the higher wave, what am I at right now? The minuet level. Oh my goodness. Let's go ahead and do this. There's 3 at minuet. 4, 5. Ooh, yeah. Is this okay? Here we go. Let's see here. Waves 1 and wave 5 typically tend to agree in size. Here it's probably gonna be a percentage. So let's look for an 8% drop to define wave 5. It's probably this one right here. 10%. That's really curious. Which means wave 4 is this little thing. I don't know if this is right, but it's looking really good. It's following rules and tendencies. So, and then duplicate this for 5 down here at the minuet, which gives me wave 3 at the minute. See what I'm doing? Going back here, it's like, wow. So this is all wave 3 at the minute degree. That is wild. We're going to duplicate this. This is 4. And then one of these 3 wave forms I have through here is wave 5, which is looking really awkward. Wave 5 resembling a 3-wave form. I wonder if that's not a bearish hint at all. Wow. And then what's the bigger degree? Oh, cycle. Okay. Right. And then here we go. At the cycle wave. Oh, I have 4 and 5. Interesting. It's got to be 4 and 5 like that. And then the triangle starts, not the end of the motive wave. Nope, it's going to start a little offset. There you go. A, B, C, D. Well, this looks like E, doesn't it? It really does look like E. Interesting. And I said it because it's overthrowing the trend line, but it's possible also that this is actually just supposed to look like this. That looks good. Yeah. I think this is the most correct. So A, B, C, D. And you can see how which low, which dip I choose to use here completely changes the analysis. And if you include in your diagonal analysis a part of a corrective wave at the wave degree that of which is not applicable, then you're going to have a bad time, right? 4, and so I guess 5 is technically an extension. That's how that works. 1, 2, 3, 4, 5. Yep, it'll truncate, and then interesting stuff. Cool. Well, I'm gonna have to keep track of that because now I have all of this analysis saying the bearish ETF is in an ending diagonal triangle through here, and if it's not, then well, there's a lot more downside to come because the wave that preceded that thing was huge. Zooming back out to the hourly time frame, we can see what that looks like. Looks pretty good. Big C wave, huge C wave, and we identified a triple extension through 3 sideways corrections, non-alternation observed, big pushes down. So many. There's at least 1 or 2 other extensions on smaller time frames of this wave 3 at the sub minuet level. 4, 5, 4, 5. Completes 3, 4, and then maybe wave 4 comes up to here, and then it's 5 at the minute degree. Insane. And then I'm looking for the 8% drop at wave 5. Is this about 8%? Yep, 11%. Close enough. Wow, that was a big one. Hey, markets are closed. Let's have a look around the charts. Maybe now, actually, it's time for me to do a video. And I'll maybe go over some of the stuff I was looking at now. Typically what happens during the day is I do a lot of analysis, and then I'll do the video. And so basically what I've done is I've done my analysis, and now I'll do the video, and you can just see how that comes together, I guess, if you'd like. So thanks for watching, everybody. It's been a good time. Catch you later. Happy trading. That's and I always have a hard time stopping the stream. And I think I actually have to do it in YouTube, or like it doesn't do it right. So let's see here. How do I... This is going to be the best part of the stream. Okay, so here we go. View in live control room. End stream.